Hello again, this is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is October 13th. It's a Tuesday of 2020, and there's a lot in our news cycle that we're going to bring to the forefront of what the markets are paying attention to, we're paying attention to, as it relates to how we manage our clients' assets here at Blanke Schein Wealth Management. Thanks for watching. So we're right in the middle of it. We got the countdown. It's daily countdown to November 3rd. And there's going to be a lot of changes, right? We had a lot of changes for 2020, a lot of unknowns, and all the modeling and all the predictions and everything's been up in the air. And ultimately, what we've learned is expect the unexpected ultimately, because we are in a sort of a 2020, if you will. The history books, as we look at the 3 months before, I've reported on this before, we have this in our presidential election edition. We want to look at the S&P 500, its performance as it relates to a prediction for those or for the president that wins the White House, for that party, if you will. Interestingly enough, right now, if we were to look at where the S&P 500 is, and the 3 months before the November 3rd election would take us back to August 3rd. So if we go to August 3rd to today, the S&P 500 is up 7.3%. Historically speaking, what does that mean? Well, if you have a market the 3 months before, as measured by the S&P 500, that's been up by 7% or greater, going back to 1928, historically speaking, the incumbent has never lost. That means that if the market is up in the 3 months before the election, which if the election was held today, the S&P would be potentially an indicator as it relates to that. Again, there's a whole bunch of unknowns. All the modeling has been off this year, as well as predictions and so on and so forth. But historically speaking, it's always interesting to take a look at it. We'll find out. We only have a couple of weeks, maybe 3 weeks away to find out. But if the market continues to hold and continue to get stronger between now and election day, that might be signaling something that could play out in terms of an election outcome. We will have to wait and see, but I can tell you it's exciting, and it's going to get more exciting as we get closer, so we'll pay attention to that. So our second topic is more election update, if you will. We have a lot of opportunity to scour research, both independent and Wall Street firms here at Blanke Schein Wealth Management and our affiliation here with HighTower. That being said, it's completely independent, so we take an unvarnished look at an independent look, if you will, of what we see. So we see all types of research as it relates to markets and everything else. And we sort of put together one of the extractions from our research here is, let's go to the board here. Proposed policies and asset prices, meaning the stock market, so on and so forth, stocks and bonds. And we have the 4 different categories, if you look at it, from monetary policy, fiscal policy, regulatory, and even trade, are the categories that we looked at. And ultimately, under Trump or Biden administration, how the assets would do, the asset prices, meaning stocks under one column, bonds under one column under President Trump, and then under President Biden, stocks, how they would perform, and bonds, so on and so forth. So ultimately, let's take a real quick look here. Monetary policy is in favor, stocks will do well under Trump. Fiscal policy, again, a lot of sort of tailwinds there. That'll continue to do well. Regulation, remember, President Trump has always been a fan of deregulation, so that's going to do well, and it's a positive for stocks underneath that if he becomes reelected. And trade's been negative, right? So we've got a lot of tensions, and that's going to continue to persist. He starts with China and goes around the world, so stocks won't be so favorable that are sensitive to sort of the trade relations under Trump if he were to be reelected here. Bonds are all negative for Trump. It really means that he ultimately loves to spend, and he ultimately loves to make certain that interest rates are super low and for a good long time. So that means asset valuations and prices will go up. On the other hand, we have monetary policy will still be positive for stocks because they'll be supportive under Biden. Fiscal, it's going to be a question because he could, as much as Trump and the administration loves to spend, Biden could come up with a Green New Deal 2.0 or something even bigger from an infrastructure and stuff like that. So we'll have to pay attention on how that all plays out. But under that, right now, the research is indicating the stocks could underperform under Biden under the category of sort of additional fiscal sort of additional spending that could be out there. Regulatory, again, Democrats lean, historically speaking, more regulatory than not. So stocks under that category will potentially underperform, as well as trade. Trade will actually be a net positive. So there's a lot of companies that could gain or benefit from a sort of a pro-trade trade ultimately not upsetting the apple cart and be more of a sort of partner globally speaking versus America First policy versus under this current administration. So that's sort of how we see, according to our research, where you could sort of see asset prices and valuations stack up potentially on an election outcome. And then bonds are actually going to be okay and neutral under the trade category, but for Biden. But that's about it. Ultimately, that's the recap right now. That could change as every day changes. But we look at this and we make that into working theory as we think about and manage our clients' portfolios, because all of this matters. And there's always a yin and a yang and a give and a get. And there's always and ultimately for our investors an opportunity on a go-forward basis, regardless of who ultimately wins Washington. So we'll stay tuned for that as well. And finally, we're going to see where Congress agrees to disagree, as I keep reporting daily, on an additional sort of CARES 2.0 stimulus package to help those like small businesses, those that need unemployment insurance assistance, and ultimately, is there a carve-out or a special package for the airlines? Airlines are suffering, but what's interesting, I don't know about you, but I get, I traveled prior to the pandemic quite frequently, and I get, all the different airlines sending me emails, and I've noticed that several different airlines are adding extra routes. There's different routes that are being added all the time. We're in Palm Springs, California here, and to have somebody, an airline sort of open up a new market here, we've got 2 or 3 that are doing that just the same. That's positive and healthy because it looks like airlines are looking forward into the future. There are some airlines that are positioned better than others, financially speaking, so their balance sheets are affording them to look their management teams long into the future and say, wait a minute, where can we grab market share? That's my take-home point. I really firmly believe that there's those that are the have and have-nots, and some of those airlines right now are using this as an opportunity to grab market share and sort of open up sort of services that we're seeing here locally just by our own empirical evidence. That being said, there was a major airline CEO on CNBC this morning on their morning daily Squawk Box, and he reported 2 different things. Yes, the airlines do need an additional stimulus. They're burning through right now because basically travel is sub 85% from its all-time high, even as we speak. But what this major CEO did report, and I thought it was interesting, and actually the newscasters from Jim Cramer and so on and so forth continue to harp on this point and said, why is this not known, what I'm about to tell you? An International Aviation Authority report that just came out, so globally a major report that all of the CEOs are part of and they participate in, and they just reported that year to date over 1 billion have traveled in airlines, in all the airlines across the world, and there's only been 44 documented COVID cases according to that international report. Now, common sense tells us take a step back. Those were early on cases that were detected, and even more probably that didn't even know that they were detected. But that being said, I kind of want to liken this to if you take a step back to post 9/11. That was the safest time to travel because there was airport security at that point in time. There were checkpoints. When we did, even though it was very, very fearful to get on the airplane, we did know that post 9/11, we knew that there was, not only at least me, I was looking at everybody, making certain that we would all together work to keep the airline safe, in addition to the additional airport security TSA. That never happened before 9/11. Much like what's happening right now in the airlines today. They're cleaning like I've never seen them before. They are having additional protocols like I've never seen before. They have filters in airlines, sort of in the airplanes themselves, that are better than a local restaurant that we have or any place that you could imagine on a local basis. So the safety factor, it's to each his own right now, and it's going to take time for all of us to get confidence whether we have more therapeutics from the science and medical field or even a vaccine maybe in 2021. That being said, I really believe from a safety standpoint, from a cleanliness standpoint, that this is that sort of post 9/11 moment in time for the airlines where, it's one of those things where it's going to be super clean, more than it was so even 6 months ago, right? So a report from a major international news wire that said it's safer than we think from the spread of the coronavirus. So that was interesting to note. I thought it was a very unpronounced take-home point that maybe in the next weeks and months to come, we have more medical professionals weigh in on this as to this most recent report as it relates to flying. But that being said, it's all sort of positive as it goes forward because the economy is reopening and just shows that, again, there's more airlines that are taking market share. That means that they're seeing through the 2020, they're going to 2021, 2022, and they're taking advantage of opportunities under the sort of situation at hand, if you will. So that's it for today. Thanks for watching. Remember, like and subscribe, and tell friends and family. We're getting a lot of wonderful feedback and even great referrals. So we appreciate that. And feel free to share this at any time with somebody that you know may benefit from our daily updates. Take care.